What is up, everyone? I just wanted to quickly show you guys something that is of utmost importance when it comes to trading in the markets. So let's just get right into it. This is going to be a session on market structure. So let's go over here. I'm going to share my screen. And as you guys can see, let's just amplify this entire page. Let's forget about time frames. Let's forget about everything, right? Let's just focus on this. So there's two types of trends in the market. The market is either going to go up like this, right? That's it, going up, or it's going to go down like this, right? So when the market is going up in an uptrend like that, you might have heard this term before. When the market is on an uptrend, we call it a bullish market. So in this case, the market is bullish, and in this case, the market is bearish. So bullish and bearish. Cool. Now, the bearish market, or let's actually start with the bullish market. So the bullish market, when it goes up and down, it has different types of retracements. So for example, it went up right here, and then it came back down right here. This right here is known as a higher high. This right here is known as a higher low. So the market, the bullish market, moves with higher highs and higher low. As you can see, it went higher high, higher low, 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 higher high. So this up to this point right here. So let's erase from this part here. Let's just focus on this part right here, right? So from all these parts, this is the higher high and this is the higher low. This is how bullish markets move. Now, bearish markets are a little different because bearish markets move with lower highs and, sorry, forgive me, and lower lows. So bearish markets move with lower highs. In this case, this would be a lower high, and this would be a lower low, right? Or let's just take it to the final point right here, lower high and lower low. Now, you got to understand something. The market, right? Let's take this perfect example right here. Went from bullish and then it shifted to bearish. The point that the market shifts from bullish to bearish is this point right here. As you can see, we went from higher low to higher high, and I'm going to write this out because this is actually really important. So go ahead and take notes if you have to, but you cannot have a higher high without a higher low. You cannot have a higher high without a higher low. That is super important in trading, guys. Same thing with trading a bearish market. You cannot have a lower low without a lower high. Super important. So for example, let's just take it right here, right? Let's take it right here, right? So the market, let's just say it's bullish, right? So it's going higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So for example, if you're gonna trade a bullish market, your points of buying would be at higher lows because you want to catch the higher low, buy on the higher low, so then when it goes high, you capitalize. Same thing with the bearish market. The bearish market, you want to buy at the lower high to then catch the downtrend to capitalize, right? So, for example, up to here, we have a bullish market. Boom, bearish market. How did we get a bearish market? Great question. I'm glad you asked. I'm glad you were wondering it. We got a bearish market the moment that the higher low structure was broken. So as soon as this structure point right here, which was the current higher low, was broken, sorry, this now becomes the lower high instead of a higher high. And this now becomes a lower low. Any push, for example, right? You see this whole market, let's say before this right here. So let's keep the lower high here. Let's keep the lower low here. And let's put this higher low right here. And let's just say we're at this point, right? We're at this point in the market. We bought, we capitalized. Oh, yay, we got the whole move. Awesome, right? We're right there in the market. Let's say, just stay with me, right? Let's say the market, instead of having this downward trend, let's say the market would have gone something like this, like this, like this. You know what all that's called? In between the higher high and the higher low, all that is called market structure. We do not pay attention to any of that. This is all market structure. Any time, for example, if we cut the bearish market now, let's just take a look at the bearish market. And let's say any price point is moving across here, 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 here. That doesn't break the lower high or the lower low. This is once again market structure, guys. We do not interest ourselves with this. Now, the secret to buying and selling, because in a bearish market you would sell, in a bullish market you would buy. You want to buy at these points right here, right? Like I said, at higher low. So you would buy here, you would buy here, you would buy here, you would buy here, you would buy, you get it, right? And then when it comes to selling, you want to sell at these points, at lower highs. So you would essentially wait for the market to retest previous market structure right here and then sell. Retest previous market structure right here and then sell. Markets, those previous market structures, if they fall within an area of interest, so let's just make this a really big, kind of ugly area of interest, right? So let's say there's an area of interest. An area of interest is an area of support and resistance. So for example, in this case, this is resistance because market tried to push, but then it got sent down, then it broke, and now it used it as support to bounce up, right? It used it as support to bounce up, it broke, then it used it as resistance. So you want to buy at support levels and you want to sell at resistance levels. So for example, this right here is support where you would buy. This right here is resistance where you would sell, right? So for example, right here, you want to sell here. Boom, you sell at the resistance. And how do I mark this as an area of interest? Because it has multiple points that the market has respected. For example, we have a point here where the market respects it. We have a point here where the market respects it. We have a point here where the market respects it. And we have a point here where the market respects it. That is the beauty of market structure, guys. I know there are people that say that retail trading isn't for them, that they don't do retail trading, and that's completely fine. It's my reality. If you want to get into it, get into it. I'm not telling you to get into it, but if you happen to stumble across this video and you like it, leave a thumbs up. And I hope this video helps you with any market structure. This is really key. This is really what I do on a weekly basis, whenever I'm analyzing my pairs. This is what I'm doing. Now, let's take this to the market, right? As you can see right here, we have a market. And we have our trusty little arrow right here where it went from bearish because we're selling, right? High, lower high, lower low. Then it broke above the lower high, making it a bullish structure. So it went from a higher low to higher high to higher low to higher high to boom, broke below the higher low structure. So now there's a lower low, there's a lower high. This is a lower high, lower low, lower high, lower low, lower high, lower low, and now we are anticipating the next lower high to be maybe around this area to potentially sell from this area and capitalize to the downside. If you do this, this will help a lot. You can literally just take this and bring it here, and it's 1,000 times clearer. So hopefully this helps you guys out with your trading. Like I said, leave a thumbs up if you like it. Leave it down in the comments as well if you guys want to see more videos like these, more educational videos. And I hope this video helps you guys out. I send my love and blessings your way.